Hi there. I wanted to walk you through how I arrived to a $21 price target on Arcimoto, ticker symbol FUP. We're walking you through our due diligence, our research, our valuation methodologies, which is sales multiple, and also how we apply technical analysis. This is meant to be an educational lecture on the process and steps that you can learn and apply yourself independently when you're coming up or evaluating a stock purchase or an investment idea. If you're part of our analyst program and you're one of our students, this is going to be a great lecture teaching you the practical application of the skill sets that you're developing in our program, and later you can share with members in our community. So with that being said, folks, let's dive right into the material. Okay, so the first thing to look at is charts. This is something that came on my radar yesterday from a technical analysis perspective. The company recently reported third quarter earnings, and it broke out yesterday, passing resistance, as you see here, this inflection point, and it made an all-time high. Now, once the stock came on my radar through my scanner, hitting 52-week high and also up on the day as one of the highest percentage gainers, I went about to do my fundamental analysis and research. Now, you can see here on the left-hand side in terms of steps how I mapped this out to better help you understand this process. So once I came across the stock and looked at the chart, the first thing I did, I went to the company website to evaluate the business, understand their products, their service, their mission, their market. Then I looked carefully at the press releases of the company, paying close attention to earnings release and evaluate their performance. The third thing I did was to perform valuation, specifically sales multiple valuation, which I'm going to walk you through in the upcoming slide. And additionally to that, I applied technical analysis, to be specific, Gartley patterns, A to B equals C to D. Fourth, I ran a Google News run on the electric vehicle market just to understand the growth rate, the potential market size, and how does Arcimoto fit when we're looking at the bigger picture? Where are they in the terrain when you're looking at the electric vehicle market? And of course, lastly, we applied our execution methodology and process. What's our entry price? What is our price target? What is our stop loss and risk reward? And is this a high probability investment opportunity or trade that we should add to our portfolio, also taking into account what would be the capital allocation or the weighted portion of our portfolio? Should we allocate 1%, 5%, or 10% of our entire capital in this one idea? Ladies and gentlemen, this is the process that I want you to learn every time you're thinking about buying a stock. Don't just pull the trigger and buy it blindly. Have a process, have a methodology, and think in terms of probability. Is this a high probability trade? Is this a high probability investment opportunity for you? So now let's continue. So here we have step number one, when we're looking at the entire business. What is their mission? What do they sell? What is their product and service? So the main point that I'll start is their mission. Early mile matters. And I'm just going to read here what they listed and displayed on their website. Global warming from carbon emissions is the greatest threat this planet has ever faced. The only way to face it is to rethink everything: how we drive, how we eat, how we shop, how we live. Our mission is to catalyze the shift to a sustainable transformation system. We believe that will only happen when we move away from oversized, overpriced, polluting vehicles, the right size, ultra efficient EVs we can all afford. Okay, so right here, you know that they're addressing a problem, which is global warming, emissions. They're trying to address that through their own solution in a more efficient three-wheel vehicle that is more sustainable at a lower price and is more environmentally friendly. I get it. Now, when we look a little bit more closer at the business, how do they describe it on their SEC filing? So this information is coming directly from their SEC filing, specifically the 10K. And I read here from this bullet point. Arcimoto primarily designs, develops, and manufactures ultra-efficient three-wheel electric vehicles. Arcimoto was formed on November 21st, 2007 as WTP Incorporated an Oregon corporation, and later changed its name to Arcimoto Inc. The company designed, developed, manufactures, sells, and rent through franchise locations ultra efficiently, fully electric vehicles. Okay, so they basically manufacture it, design it, and they have dealers franchise across the west part of the country. I believe primarily it's in California. I think they also started to sell them directly through other franchise dealers in Florida. You may want to go back, look at their website, look at the SEC filings just to fact check that point right there. Now, in terms of their thesis, how are they presenting their thesis on the SEC filing? So let's go through this. Arcimoto develops, well, we already know this part. By doing so, we aim to deliver meaningfully more efficient solutions to the market at a fraction of the total cost of ownership of today's car. Current automotive platforms are inefficient by design. Wow, they are really going after the existing automobile market. They're saying basically platforms inefficient by design. Okay, cars can weigh upwards of 4,000 pounds, take up an average of 100 square feet of space on the road and when parked, and are way over capacity for the vast majority of daily transportation. Okay, those involving one or two people traveling relative short distance, relative small volume. Okay, fine. So again, it all goes back to efficiency, space, and they're again attacking the way automobiles are manufactured. They're oversized. They're not fit for environmental friendly and sustainability. So I get it. So their solution is their three products. Fun utility vehicle, which is this one, starting at $17,900. I mean, it kind of looks like a golf cart with three wheels, but if you go to their website and watch their videos, they're actually pretty cool. It seems pretty fun to drive. They can go up to speed of 70 miles an hour. They also have their second product, which is a rapid responder. They're working with firefighters, police, anything related to first responders that will make it more efficient rather than having a traditional vehicle for them to use. And of course, they have the Deliberator, which is in partnerships with other companies that are doing delivery. For example, the mail. I know they recently started doing a partnership with DHL to test this, but this could be transferred to different utilities when you really think about it. It could be food delivery. It could be someone delivering you a pizza. Like I've mentioned previously, it could be the mail. It could be Amazon packaging as well. So I can see the potential of this particular product if they do partnerships with corporate clients. So this is the first part of my steps in terms of understanding a little bit about the business. What is the problem? What is their mission? What is their product? And is there really a need for this particular product that they're manufacturing and created? If this is my take, you can definitely formulate your own opinion. Go to their website and evaluate the business yourself. The second step is to look at the press release and focus primarily on earnings. So in this slide, I'm going to walk you through some screenshots that I took from their website, specifically the press release. So in terms of Q3 highlights, so let's see. On the first bullet point, resume production and delivery efforts, putting more Arcimoto's customers' driveways, including 31 vehicles delivered in the month of September. Okay, 31 vehicles is not a lot, but remember that we are in an emergency national state with rising COVID cases, and other states have put in place lockdowns because of perhaps the second wave that is coming. So they are experiencing disruption to their manufacturing capabilities. So this is fine. I understand that. Second bullet point, here it is. Team with DHL to enable nationwide home deliveries of Arcimoto vehicles, representing an incredible milestone of the company's direct-to-consumer sales model as it plans for mass production with a seamless delivery solution. Okay, so this is good. Seems that they're doing partnerships, adding more Arcimoto vehicles on the road, and this could be the potential gateway access to other corporate clients that perhaps they might want to partner with. This bullet point right here is pretty important. Secure a 10 million common stock only registered direct offering to strengthen the company's balance sheet at the strongest valuation in the company's franchise history. Okay, so they're securing enough financing to continue to finance their development, their expansion, their growth. Now let's look carefully at the financial results, because I like numbers. Okay, data and the numbers, they always tell a story. Total revenue for the third quarter of 2020 was $683,000 compared to revenue of $33,000 in the same period of 2019. I mean, look at this. So last year in the same period, they generated $33,000 in revenue. That's not something to cheer about. But when you see what they're able to do this year in the third quarter, I mean, that is astronomical growth. During a pandemic, when they are manufacturing a three-wheel vehicle here in the United States, I think that is something that you should be cheering. I think this is quite an accomplishment. And also they're providing and creating jobs in our local economy. So I like to see this type of growth. But what is the growth a year from now, 2 years from now, 3 years from now? Are they going to surpass the $1 million mark? How fast is that growth going to be? And as an investor, what am I willing to pay for that growth? That's a very important question to ask myself and you members of the audience. In terms of their production, let's see here. The increase in revenue in the recent current year period was due primarily to resumed vehicle production and customer deliveries, including okay, so this is already mentioned at the top. Let's see, from production start in September 2019 to 2030, the company has produced, 136 production vehicle in total, up from 57. Okay, so they're definitely growing number of production by triple digits. So that is good. I'm curious to see what the growth rate will be in the upcoming year and over the next 12 to 24 months. So that leads me to my next slide. And in the next slide, we're looking at valuation. So number one, we went and looked at the company website, the press release, the business, the model, the problem, and their solution to global warming and admission. Number two, we looked at the press release, more importantly, their most recent quarterly report. And now we're applying valuation. So continuing from my main question, what is the expected revenue of this business? Well, look at first, left-hand side table, which is our financial data tab. Look at revenues. Look at sales for 2020, 21, and 22. Let me change this. Here it is. You see that? So we go from 1 million to expected this year, 3.2. Next year, 21.6 million. And in 2022, 72.6 million. Look at the growth. This is triple digit growth over the next 24 to 36 months. That is massive growth. This is what I like to see. Personally, I like to see companies that are growing revenue over 50%. The higher, the better. Even though that they're losing money, earnings per share is negative, and that's expected. Of course, they are burning through a lot of cash. They're spending probably in advertising in their facility, hiring employees to build the infrastructure so that they can meet the demand and the growth that the company is experiencing. So over time, maybe in year 4 or 5, they would become profitable and they'll continue to generate cash flow and have enough cash on hand, but also not only on the balance sheet, but from their core operations to sustain the growth going further. So this is something that I like to see in companies. I like to see this level of growth. Now, when we're looking at valuation, I'm applying a EV over sales multiple valuation, and you can see the multiples right here. And through these multiples, I arrive to an implied share price for 2022, okay, of $20.72. Now, how do I arrive to this? We are going to take our sales, multiply by our 30 times multiple. This gives us an implied enterprise value. We adjust for our net debt to get equity value. We divide the equity value by the company's shares outstanding, and we get our implied share price of $20.72. Now, the important variable here, the important driver is the 30x multiple. Where am I coming with this multiple from? Okay, well, we look at comparables. We look at the competition. And I broke it down into 2 sets: utility motorcycle manufacturers and 4-wheel electric vehicle manufacturers. When we look at the first table, the utility motorcycle vehicle manufacturers, look at the enterprise value over revenue or sales multiple for these guys. Here it is, this column right here. Okay, when we look at the industry mean and median, 13 to 5.7. Now, Arcimoto is trading currently at 94 times. Okay, you might say, but Luis, this is much higher than the industry average. Aren't they overvalued? That's a good question. But you have to look at it in terms of performance, not absolute value. Look at the growth for 2021 for all of these guys. With the exceptions of Workhorse, which is expected to grow revenue in 2021 by 1,300%, with the exception of them, okay? Look at everyone else's growth. Some are not generating revenue. Some are losing revenue growth. They're declining, decreasing. See that right here. And the other ones, the ones that are growing, they're not growing at triple digit like Arcimoto. So when you compare Arcimoto's growth with the industry median, just to extrapolate any outliers, Arcimoto is growing much faster than the industry average. So yes, they do deserve a premium. Now let's compare with 4 vehicles electric manufacturers like Tesla, NIO, Li Auto, Nikola, and XPeng. Notice that the majority of these companies are based in China. China has become the largest electric vehicle manufacturer, and I'm going to give you a little bit more information on the overall size of the industry, how fast it's growing in the upcoming slide. But let's continue with looking at your traditional electric vehicle manufacturer. Look at their EV over sales multiple, okay? The median, 32 times, while Arcimoto is at 94 times. Okay, let's focus on 2021 growth because we're looking at 1 year out. Look at the growth. Look at Tesla sales growth. Look at NIO sales growth, Li Auto, Nikola, XPeng, okay? And then for the industry median is 92%. Look at Arcimoto. They're still growing faster than most of these companies in the industry average. But when we're looking at sales multiple to growth, another metric to measure and look at it from a relative basis, not an absolute basis, the industry or the market is paying 0.33 times the growth rate. Whereas for Arcimoto, they're paying 0.16 times for their growth rate. So from a relative standpoint, Arcimoto is trading at a discount to the traditional four-wheel companies. But one point that I may add is that probably the market is giving them a discount because it's 3 wheels rather than 4 wheels. I get it, that's fine. Some investors might think, look, it's just, it looks like a golf cart in 3 wheels, so I'm not gonna pay the same valuation I'll pay for a fully electric vehicle car that is 4-wheel, is bigger, is more comfortable. It's a luxury item, right? If we compare it to a 3-wheel car manufacturer. So rightly so. So maybe they do deserve to be trading at this multiple, okay, at 0.16 to their growth. Now this 0.16, okay, when we look at what I'm currently using, right, sales multiple to growth, look at that. I'm not even doing 16. For 2020, I'm doing 0.5, which gives me a 30 times multiple, which is much lower than where they're currently trading at right now. And I still get a share price that is 120% above yesterday's close, Wednesday, November 18th. That should be, let's see right here. Yep, it should be November 18th, not October. So disregard this. It's actually November, okay? So that's potential upside. Now, if you look at 2022, and we get a little bit closer to that, sales multiple to growth, if we pay 0.13, what is then my multiple? Well, I'm still using the same multiple, but from a sales growth to multiple standpoint, it's 0.3. It brings it more in line to where they're currently at right now. So take that 30 times multiple and multiply it by 2022 sales, okay? Then you get your enterprise value, adjust for your net debt, you get your equity value divided by your shares outstanding, and you get an implied share price of $68.83. That's 600% return. Okay, now again, this is just playing with numbers and applying multiples that might either be expensive or can be conservative. It's up to you, do your own homework. Me personally, I believe that 30 times on 2021 sales growth numbers, it's reasonable and probably on the lower end side if we're being conservative. And here at the bottom, I also did a sensitivity analysis table based on different price targets. So how does this work? Here is the sales to growth calculation or multiple. Here is my enterprise over sales multiple. And based on this multiple, you can easily come up with your price target. So if the company trades at a 70 EV over sales multiple, you might be looking at a share price target. And this is again using 2021 sales number of $47.78. Not bad. So I think from a valuation perspective, when we're looking at utility motorcycle manufacturers and four-wheel electric vehicle manufacturers, I think that the multiple is rightly justified given how fast they're growing sales. I mean, triple-digit revenue growth for 3 years in a row or for 3 consecutive years, as what other analysts are forecasting on this company. I think that $21, it's a reasonable share price, right? Given where they're at, given their product and what they're trying to do. So with that being said, let's go on now to the next slide, which talks about more the overall size of the market and the industry, because this is really a play on electric vehicle market. And of course, it's more sustainable. You're addressing climate change. You're making things more environmentally friendly for sustainability. That is the overall story. And in that overall story, we're targeting one specific niche, which is the electric vehicle market. Now, the main focus title here is that strong industry growth over the next decade, with electric vehicle sales rising from 2.5 million vehicles in 2020, now look at this number, to 31.1 million in 2030. So from 2020, 2.5 million vehicles, all the way to 2030, 31 million vehicles. This is applying or implying a 29% compounded annual growth rate. So this is massive growth that is expected in the electric vehicle market. That's why, for those of you that have been paying attention to electric vehicle stocks like Tesla, NIO, Li Auto, this sector is hot. Those stocks are up over 100% year to date, some more than others. So now you can begin to see the overall thesis and the massive force or the massive wave that Arcimoto is also trying to capitalize on as an alternative to a four-wheel electric vehicle. And right here, we can see one of the consulting firms, Deloitte, on this bullet point right here, where we get this information. So Deloitte expects annual EV sales to, from 2.5 million to 31.1, implying a 29% compounded annual growth rate. By 2030, electric vehicles expected to account for 32% of all automobile sales globally. Approximately 27% will be in the United States. The other remaining part, and I've actually seen some articles that say 80% will be in Asia and Europe. 20% will be in the US. So Deloitte is being a little bit more optimistic or probably aggressive with their 27% estimates compared to other things that I've said. Now, in terms of the market size or the dollar value, okay, here's what it's expected to be by 2027. 800 billion, almost $1 trillion. Again, this is massive growth. Now, of course, you have companies like Tesla, NIO, Li Auto that are within the mix of companies that are also capitalizing on it. And of course, Tesla being the number one electric vehicle manufacturer, they have 20% of the electric vehicle market. But again, what is the alternative to a four-wheel electric vehicle? Well, now you know, Arcimoto with a three-wheel recreational utility vehicle. I mean, it has multiple functions. It's not just recreational. You saw the delivery and you saw the first responder use of it. So it's important to understand the bigger picture and the market that you're in. You can simply find this information by doing a simple Google search. This slide, the information that you're seeing here comes directly from the company Investors Relations page. This is their investor presentation, just educating the public, educating potential investors on how they see their business and how they see the industry. Here it is, multi-purpose shots in gold with the design, the engineering of their model, or this would be, I'm not sure what the correct technical term this is. Is this the body or the chassis? I'm not sure. My background is not in automobiles, but you can see the intended purpose: daily driving vehicles, last mile delivery vehicles, first responder, and fun utility vehicles. Okay, so they're targeting 4 different categories here with their vehicle. Okay, and again, they display this in their investor presentation: the fun utility vehicle, the deliverator, and rapid responder. Okay, I'm not going to go too much into this. The information is here for you to read it. Go to the company website, open up their investor presentation and read it so that you can familiarize yourself, and let me know what you think. I mean, do you agree that this is a unique product as an alternative to the traditional 4-wheel electric vehicle products? And last but not least is the execution. Okay, so we went over the product and service, their mission, and what they're trying to accomplish. We looked at press release representing their 3rd quarter earnings and how fast their revenues are growing. We also did our own valuation by looking at the financials and comparing 3-wheel electric vehicles and the traditional 4-wheel electric vehicles. We looked at the growth, the multiples, and we came up with our approximately $21 price target. We also looked at the overall size of the industry and how fast it's growing. And now we're going to look at an execution game plan to have if this is a stock that is worth adding into our portfolio. Now, what I'm sharing right here is what I actually did. So my entry price is approximately $10. My stop loss is $8. What is my time frame on this? 3 to 6 months. What is my price target? $21. That represents a potential upside of 110%. I am risking 2 points, okay, to make 11 points. This makes it a 1 to 5.5 risk to reward ratio. And also it's breaking resistance. This is on a fundamental basis, okay? When we look at technical analysis, Gartley pattern, my A to B equals C to D price target is $13. So notice that on a technical level, my price target is 13, but on a fundamental level, when we apply enterprise value over sales multiple analysis, we come up with a $21 price target. I am going to focus and put more weight on the fundamentals and the sales multiple methodology. Okay. Now, capital allocation, this represents 5 to 10% of the portfolio. You're not going to go all in one idea because that's too risky and that's just insanity. If you go to, let's say, Vegas, and you're looking at a roulette table, are you going to take all of your portfolio, your life savings, and put it on black? Absolutely not. It's very risky, right? So this right here, I'm giving you a more risk management or portfolio management approach on how you execute your idea, and you have a game plan and you're not guessing. You're removing the guessing, you're removing all of the variables perhaps that you cannot control, and you're putting it into your I would say more into your own control when you are outlining and mapping out your game plan. And this is what you should be doing for every single stock that you're buying. It's not just buying and holding and praying and thinking that it's going to reach your price level and it's going to go, to $1,000 and you're never going to sell. That is not a game plan. You're hoping and praying, and that's just a recipe for disaster. You might get lucky, right? You might find an acorn here and there, but that is not a repeatable process that will make you successful over the long run. What's the long run? I'm talking about 5, 10 years. This is about longevity. This is a marathon. This is not a sprint, all right? Understand this process. And lastly, in terms of conclusion, here it is. These are all of the things that you should be accounting for when you're looking at your own analysis for your individual stock to elevate your understanding and just to make you a better investor. So let's go through this. Number 1, start with your investment idea. How did I find it? The stock was hitting they were on the 52-week high, and there was one of the highest percentage gainers in my scan list. So I was using a scanner to come up with the stock. But then after that, I did my research. I'd apply fundamental analysis. We learned the product. We looked at the sales growth and earnings. We understand the industry, how fast the electric vehicle market is growing. I gave you those numbers. Also, you could do your own Google analysis on the U.S. economy, GDP, unemployment, what's Fed policy. I mean, I've done other videos within the YouTube channel talking about this. In terms of technical analysis, okay, we looked at a weekly and daily chart. We apply support and resistance. You saw that I looked at resistance, the most recent previous swing point, which is one of the reasons why I'm buying the stock, because it's right after that ideal purchase point, okay? We looked at the big picture. We applied gardening patterns. We came up with a $13 price target. From an execution standpoint, our entry, approximately, actually it's slightly below $10, but let's just say $10 for this example. What is our sell price target? 21. What is my stop loss? $8, okay? I'm risking $2 to make approximately 11 points. That represents a 1 to 5.5 risk reward ratio. What is my capital allocation? This should actually be in terms of percentages. 5 to 10% of my overall portfolio. So that's it, folks. I walked you through this analysis. I know the stock is up today. Do not chase. Do not follow my lead. I am showing you the process so that, again, you can internalize it yourself and just learn this and elevate your knowledge. This is what we're actually doing for our analyst community in Romero Mentoring. In this process, we actually apply it. Let me pull up here our platform. We actually did this for Li Auto, right? About 2 weeks ago, we did the exact same thing on Li Auto. And I share this with all the students in our analyst community. And my entry level on Li Auto was $21.50. And I had a $19 stop. And I said that I think Li will follow the same story and price move as the other electric vehicle markets. And then I own the stock. And of course, it's about sharing the knowledge and collecting feedback. This is the feedback that our analysts and our student analysts were sharing, okay? Validating, collecting information. It's about sharing the knowledge and elevating everyone's understanding of this process. Now, what happened to Li Auto? Let's pull up here our chart. Li Auto turned out to be a really good winner for us. Here it is. When we came up with this idea, it's right around here, okay? Yeah, right around there. I believe it was here or in this one. We bought it at $21.50. The stock went as high as $40 in a very short period of time. I mean, 2 weeks, that's a 90% return. And we apply, again, the same process, the same methodology that I just shared with you on Arcimoto. So let me know what you think, folks. Share your comments and please be thoughtful with your response. And for those of you that have been leaving positive comments, I appreciate it. Thank you. But the best thing that you can do is learn this process so that you can elevate your own understanding of the stock market and stock analysis, and then you can share with other people. Again, this is meant to be education. Don't follow my own ideas. Again, I'm using this as a case study to teach you and educate you. Feed a man for a fish for a day, he'll eat for a day. Teach a man how to fish, and he'll eat for the rest of his life. It's about becoming independent, folks. So with that being said, stay safe, be healthy, and I'll see you in the next one. Take care.